Hey everybody, welcome back. No fancy intro tonight. We're just going to jump right into it. I have a lot to cover and I'm going to try to keep it compact. CPI came out. We're going to address that and what transpired there. More importantly, we're just going to talk about the levels that we're at and kind of what to expect going forward. Now, we have a lot going on this week still. You have PPI tomorrow. Then we have quad witching. Quad witching is where four asset classes expire all at once and they have to roll them over. Single stock futures, and you know the rest. The reason I'm bringing that up is Friday is usually, quad witchings are usually a volatile day in the first 45 minutes. My concern with CPI today was it came in a little higher and then the market really didn't fall down. It was predicted to fall down and it did not do that. Now, one of the things that we went over and we went over it pre-market and then we went over it last night and we also went out in the free newsletter, make sure you get it. But we went over this and I can actually blow this up right here. What was predicted to happen versus what actually, now this is from JP Morgan and we were looking for 5%, anything over 0.7, which we obviously didn't get. We were supposed to lose 2.5%, but that didn't happen. So this is what actually happened. What was predicted is we were going to lose 1.5%. That's not what happened here at all. Matter of fact, we came in line and we were up on some of the other numbers, which I'm not going to spend an inordinate amount of time with. But here's what's important about this. We came in, this is what was predicted. Now this is predicted, just so we're clear as I explain this. How did they come up with this prediction? They're not picking them up out of, just out of air. They're picking them up by looking at interest rate swaps, looking at how people are hedging. They're actually doing the work to come up with this number. And this is what they thought right here. And what we had was up 8 basis points. Now, why this is interesting is we should have come in on this number because we should have seen the fact that interest rates are going higher. But instead of that, we didn't. What wound up happening was a lot of nonsense. Now, what do I mean by a lot of nonsense? Well, you can see these marks right here and how we moved. One of the things we did in the pre-market video and the public was just explain how we look at the world, which is you take this first 5-minute bar and you just mark it because that tells you where the algorithms are in the high frequency traders. And then you just want to see how you trade around that. What you'll always notice with that first 15-minute or 5-minute bar, and you can actually do it even off the 1, quite frankly. We can drill into it that way. It's usually the same between the 1 and the 5. And you can see from that bar over all day, let's get rid of RSI here for a moment. What did we do? We just stayed in that range. And I always find it so fascinating because you try to get over and then you just get shot down. That's a half hour. It took to the open to get over. Then you fought the area, tried again, didn't happen, broke, touches it. And you can see this area, this one little area, became support or resistance all day long. It's very important to remember that. You're going to see the same thing very similar tomorrow with PPI. Now, again, for time's sake, I'm just going to state this. Last month's PPI came in higher than CPI, which means corporate profits would be down. PPI is what they pay, the corporations pay. CPI is what we pay. If there's a discrepancy there, it goes to corporate profits. That's why we sold down last time on PPI more than we sold down on CPI. Be aware of that as we go into tomorrow. Again, for time's sake, we're not going to drill into all that. Please comment on that. I'm trying to make these videos under 20 minutes on the weekdays so that people can get through that. I'd rather just comment on what I see happening. In some cases, I think it's better getting into all the details on Saturday when people have time. You can see this level right here, 45.18. What level do you think you should watch tomorrow? Might want to watch this 45.18. I mean, this is absolutely glaring how easy it is to just mark that level. And it's not just the ES. If you drill into the NQ, and let's just pull this back and drill down into this and look at that 830 level, you're going to see the same exact thing. Now, what's fascinating about this is we've been seeing this a lot where ES is outperforming on these days, even on days when it's not supposed to, which is kind of fascinating. Today, I wouldn't have expected this to happen, but it did. And now you can see your levels, support, support. Once you flip, tries again, support. So support and resistance is being established. Now you're going to see this level up here. Now this is a pretty significant level and we're going to explain why. One of the things that we were aware of, and we looked at this in the trading room, let's drop this off to the 5 and then we'll get into it. It started an hourly and then we can back it in. So, and we're looking at an hourly. Thank you for the comments on that, for stating, hey, tell me, even though it's up right here, for stating, hey, just tell me what time frame you're looking at when you're doing this. That comment means a lot because if you think there's an issue, the person that said it. Other people think it's an issue. So the time frame's always right up here, but I will try to make a habit of saying it more. So we have the neckline right here, and you can see how that played out. Now, we all know that this was the left shoulder, the head, and the right shoulder. We can see that the neckline started to get established all the way back here in August. The test of that neckline right here, the retest of that neckline right here, and guess what we did today? We tested that again. Now, this let us know when we were in the community today that this was not the spot to be putting on new trades. Now, one of the things you'll notice, this is just the observation room there. I just post these when I see these things happening. I see that rejection. I see it on the hourly. And I just pointed out, people are going to do whatever they want to do, but you can see the timestamp there. I think it's really important to show the timestamps. You can comment on that, but I don't see any reason. 225 seems prudent to wait for this to clear up. And that was just me saying, hey, I wouldn't be doing much here. And candidly, even that, when I started to look at some of these breakouts, they really played with us today. This was probably one of the harder days of the year for me, is trying to get a footing on what the heck was going on. Even those that should have bounced, which I will get into in a moment here. We have a ton of names, they didn't bounce. The ones that looked like they were going to break out, they didn't break out. Now there's news on the energy cycle and why that didn't happen. But what I want everyone to take away from, I want everybody to remember this level, 15,610. That's the level that you were unable to break. That's the level you were unable to break here. That's the level that you held here, here touched, broke here, and failed here. Seems like a pretty substantial level that we should pay attention to. I know there's some other moving averages that are very close to there. I think it is very glaring what is going on here, and I think that you should pay attention to that. Now, if we drill into some things, I thought, again, this was mind-boggling to me. We're watching the market do what it's doing. We're watching tech bounce around and just tear people apart, chopping up, chop suey today. And now you look at the VIX. Look at what's going on here. We're imploding. The VIX is imploding. Let's look at the dollar. The dollar imploded and then started to rally. Now, are we going to work this bar off or not? I don't have an answer to that. Let's look at the 10-year. The 10-year, they're buying the 10-year. So this comes out, the CME switches to 95% chance that they stand pat. They buy bonds, and then tech hardly moves. Now, when I say hardly moves, you have NVIDIA up 1%. If we drop in the simplest of moving averages, we will see it is holding that 55. Does this look great? This was a tough one today. I tried, and that's what I'm saying about today. I'm just going to be blunt. Like, today was not an easy trading day for me. What I thought was going to happen and the way that I thought that this would play out, it really didn't. And candidly, I really look at these investment banks when they make those statements, and they're usually fairly accurate, and they just really weren't today at all. So you come in a little bit and you try not to have a bias, which I don't really have, but to think that we're going to hold that area, that one little spot without even a shakeout, I just didn't buy it. And then you run up, and I don't like these kinds of patterns unless you're like super scalping, because they're just waiting to sell up. Now this was fascinating, and this was totally textbook. All you did was come right back down, gap fill, reverse off the gap fill, and go from there. But these patterns, again, this is what was throwing me off today. See this reversal pattern of this shooting star, and then you have the reversal right here? These hardly ever work. And so to see something like that, even though it was here, I just held off. Now, it's one of those days and you see that kind of volume coming in and go, okay, well, you could have made X. Sometimes you're better off and you just stay out of the way and you let it happen. So, and I noticed that today, every time that you were sticking your head waiting for something to break out, it just didn't. This bar is still the control bar. It's still in control. There are signs here that this is getting better. I'll show you one. Let me drop this to a 15, and then we'll go into this on the right here. So this is an 8, a 5, and a 3, and this is, they're for dailies, and this is just on a 15-minute chart. If you just see how this is setting up in here, you can see very clearly that you're above the 3, you're above the 5, 8's up here, and you've really been battling that 5, but they're getting closer and closer together. This is definitely constructive and something that we want to see. But if we look at this and we look at that level, the big thing for me is that we're back above the 55. I use a 12, a 22, and a 55. You should use what you like and what is working for you. This is what works for me. So this is something that I was kind of surprised this held, candidly, but it did. Now, we'll see what happens tomorrow with PPI and going from there, and quad witching we'll get into tomorrow night. Make sure you listen to tomorrow nights after we have PPI and quad witching. This doesn't get any uglier. It really doesn't. So let's talk about what's really happening with Apple. You couldn't stay above the 55. You cannot stay above the 22. Nobody's going to pay the same amount of money for an iPhone because it weighs 1 gram less. They're going to have to figure this stuff out, or they are going to have some issues. They're going to have to get innovative. I don't know what that looks like. I'm like the least innovative person in the world. But when you see how you're acting on that 22 and how you're setting up here, this is nasty. The easiest way to do these is to just measure the top of that from the neckline. This little neckline gets you 3%. And then you do the percentages versus doing the numbers, because the percentages are a better read and they'll be a little different. But that puts you at like 168, right around there. Come here, you drop in that 200, take a look at it. By the time you get there, it might be a test of the 200. That might be where we're going. Now, I know some people will drill into this a little bit, and they'll look at these numbers and say, well, let's put the 100 there, the 150. Look, we could put moving averages all over this, and we'll find it hit one moving average. My advice is find the ones that work for you and stick with those. The way this RSI is rolling is definitely an issue as well. I did like some names out there today. I do want to get into a couple because I've been asked about them and there's been comments on those names. And you can always comment on a name. And if I think a lot of people are going to be in it, we'll go from there. Candidly, this was one of the best day trades I had in the day. It was just taking more money out of Amazon. We have a swing in at 136 we're doing well with. There's a level here. I'm going to take all this out and just show you up here, and you can see it very clearly coming across, neckline, break, and then here as well. If I draw on this on the weekly, it gets even clearer, those levels. And you can just kind of see how that was your breakdown right here, held that open, flipping it right there, and now you're trying to get over that wick. So you're in this little area that's pretty significant, and you can see the breakout, the retest of 3 weeks, get over that little spot there, flip, and now you're looking at getting like a Marabuzo white, which is a really powerful candlestick. If we could just finish like this up at the close on Friday, that'd be great. Quad witching, who knows? Who knows what happens on Friday? You just don't know. But this is really powerful, the way that this is set up. And I would not sleep on this. And you have to think about this too. And this is worth spending some time on. Even though we're in a little cheaper, if you're not in this, you're going to want to watch this one. I'm going to just draw this here for a moment. People are going to say, well, do you really want that there? Look, the way that I look at this really candidly is it should be sitting right here, because I actually want to be on these opens or closes that are right here versus being on the wicks, because wicks are price rejection. And if I draw the line like that, you'll notice a couple things. I can actually draw it a little tighter. And I don't want to get too much into the education tonight. But if you draw them on those levels, the opens and the closes of that particular time, you'll find other rejection spots and breakouts that you weren't really looking for before, versus just coming up here and saying, well, there's my line because that's the wick, or this must be the trend. And then it doesn't really look the same, and you're just negating something that happened before. When you go to open and close, you get a completely different story. And in my opinion, you get a more accurate story. Why am I showing this? This is your DTL. Confirm of a DTL, what do you have to do to get a DTL confirm that it's broken? You have to make a higher high and close higher high over here. So we're looking for a higher high close of 146.60. And then I'd like to see a follow through bar for confirm. But if you get that, this downtrend from 2021 is over. Okay, that would mean that it's over. It doesn't mean it's never going to go down again. It would just mean that, hey, this downtrend is negated. And that would be pretty powerful. Now, there are a couple things here that I do definitely want to go over. And I'm trying to stick with the larger cap names, especially for tomorrow. And I would suggest that you look at only the larger cap names tomorrow with the way that we're going to trade. I do want to discuss Oracle because that was just a perfect example of flim flam today and what they did. And we have to go through NVIDIA and some of these other names, or Netflix really is what we need to go over. The video we've covered enough, I think, for tonight to get through tomorrow. But if you look at Tesla, look, guys, say anything you want. I'm still in. My body's still in this big bar. I still have a doji. They made life real easy for you here. Really easy tomorrow. It's real hard to look at this and to not think that you have some kind of shot here. Now, I could put in a bunch of indicators that I looked at already, and for time's sake, I'm not going to do it. Maybe we'll cover it a little bit in tomorrow's pre-market. I don't want to get into them all. It would just take too long, candidly. But look at your touch. You form your little doji. You flip your doji, and you rip. I mean, there's really not much to say here, whether we're thinking that, oh, well, we should really be looking at today. Well, that's fine. Today's beautiful for me, and I'll explain why. Everything took place in this hour. So the only thing that you did today was get chopped up, meaning if you shorted it, you got chopped up. I made a couple dollars, and I'm not even talking per share. I mean, like literally a couple dollars on a trade. It was just a really rough day. You're looking at that 270, you keep holding it, and it just wasn't really going anywhere. What I like about this is you're getting tighter and tighter, and you're frustrating more and more people with chop. So when we get that directional move, not just this name, but in the other names, it's going to be reflecting price, and we're going to actually be able to get some volatility and make some money off of it. But I think it's really important, even look at this on the 4 hour. I mean, here's your level, you try to touch it, breaks out, doji, fails, undercuts doji, surely that's the end of it, and then you get two dojis in here. So don't rule this out because it's consolidating in here like this. To me, I don't think there's anything very clear here. I think the clearest thing about here is that it's not clear. And I think if you look at this, you're gonna say, oh, well, we have this cross here, and now you have this. Do you, or do you have a big move that trapped a bunch of shorts and you haven't even retested this? See, I like retest because at least it lets me know where I stand. Hope that makes sense. And as long as you hold 270, you have to have a long bias. Oracle, this is something to me that we got right to that neckline. It looked to me like we had an actual shot of breaking. If you go to a 4 hour here, look at that. You completely encapsulated the entire day in one bar on a 4 hour. Look at this on an hourly and blow this up here for a moment. Let's dig into this. Look at the hourly, 4 hours straight buying. Got right to the neckline, which is right here, and then just complete rejection. That's pretty telling. But I don't know. It looks to me like it was going to break out and then rolled. And that was kind of the theme today, wasn't it? You just didn't have follow through at all. Let's go here and clean that all up. And even like MRNA coming out and saying, by the way, boosters aren't free anymore. We're going to add 6 to 8 billion in revenue. And then all you did was had selling down here. I shorted this and then it just moved so fast. It was really hard to really get anything major off on that one today, candidly. By the time I got that off on that move, it was just so fast today. And this is really some of the stuff you're saying, that when it happens, it's like this. It's literally from 110 to 109 in a minute. Like, that's the kind of day it was, where it was hard that even if you're right, you're looking at it and you're kind of getting out of position. And then the next bar, 2 minutes later, you're down here. So it was one of those days where, in my opinion, it was a very difficult day to trade. If you bought off the open, you probably did okay. But other than that, then you just had some news stories out there like Netflix. The CFO speaking today, and you can just see the downward trend and trajectory of this. I did one trade. It worked. I took some money out. I tried a longer term trade, and it just absolutely failed and capitulated at the end of the day and did not work. And it was that kind of day, candidly, for me. And the reason I'm saying that is that there's a lot of misnomers here that every day everybody makes money, and it's just very simply not true. It just isn't. So if you take a look at the way that this is, he was speaking about the ad revenue business, and you can look this up on any of your news services, and saying, oh, it's a tough business. We're going to start piecemealing it out, meaning selling that kind of business. It's very hard to get this business to work. Like, it was not a positive speech by any stretch. When you start reading the headlines, this is where my head is with it, and this is how I would look at this. He's going to have to clarify that statement. Okay? They came out here, let's just be real clear about this so that we're all on the same page. And this gets into our stool, and this part of the stool is going to be fundamental analysis. This moved because of the ad business and them getting into the ad business. This is why you started to curl here and people started to get involved and started to hear more about this ad business, and we started getting through these levels. If they're going to say, by the way, we're getting out of this business, or we're going to sub this business out and sell parts of it, that does not fit their revenue model. And his comment about, oh, we haven't touched peak gross margins yet, as somebody that I'm on some kind of family plan where I'm paying $22, and it's not the money that bothers me, it's the pricing. I'm like, what am I paying $22 for? And so you really start looking at that bill and going, well, and I'm pretty oblivious to things like that. So if I'm looking at it, I'm sure other people are looking at that going, what am I paying for? Like, when was the last time I watched something on here? Anyway, before I digress, I would watch this very, very carefully here, and I would certainly think that you could get to that 398. I think someone's going to come out and defend it. That's what I think. I'm going to trade what happens. I'm going to have my opinion. I understand that if I break this neckline, that I can go a lot lower. Now, with that said, there's some other names that I really want to cover and some sectors that I want to go through. So we're going to start with the XLE. So we started off like gangbusters here today, and then we just started to roll when some data came out that pointed to inventories, and that made us sell off. I'm going to just tell you this. I don't think this trade is dead. I think it's far from dead. But we did see some selling in these names. Now, Casey's, we didn't see selling on. We actually went over this yesterday. This is a really tough day for me to look at something like this and getting involved, but you can see how it did. It did exceptional. It's not my kind of trade in this kind of environment. So I will pass versus put myself at risk, especially when they're thin like this. But this did exceptionally well and made another all-time high. I like this space a lot. I specifically like what they're doing. But you're seeing these super majors start to stall a little bit, and they're stalling at a common level. I would not rule that out, that we might stall a little bit here, but you are seeing these coal names just absolutely rocket. I don't have any real exposure personally to it. There's a lot of people in the room that are playing them. It's worth pointing out that you're seeing these subsectors take off, but different sectors of energy, whereas I'm in SLB and I'm up, but I'm not really doing that well. So you're seeing some of these subsectors work, but even Gush is something that I'm in, and now it's trying to break out, but it look like you're butting your head up here. So we might go sideways for a while. Now, this is a really interesting development. I've been watching this for a while and waiting for this. I'm going to show you this on a weekly. So this is just uranium. I am not a big uranium guy, far from it. Okay, and I can't really tell you all the nuances on why they move and everything else. What I can tell you is what's going on here. So you have a huge base here. You have a multi-year base here. You have a doji sitting right on that level. You're sitting right there. You flip the doji and you close here on the weekly. This is a close. This is something you want to pay attention to. I don't need anything else underneath. I can already tell you what the RSI is going to look like in the MACD. They're already pointing up and they're already bullish. They have to be after consolidation like this and this kind of move. And they're not going to be overbought. They're just going to be getting started. That's your first target on this. So if I could move like that, what can the names that are in that space do? They can move considerably more. That's it.